Hello, traders. It's 8:04 a.m. Chicago time on Thursday, the 5th of March, 2020. Apologize for the late start. It's been a heck of a morning with tech issues. Every once in a while, it's like a full moon for my technology or something. In any case, this is episode number 1706. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. The market is allocating to safety yet again, pulling out of risk assets as the market dropped pretty strong here about 2 hours ago on news that, well, there's a lot going on, but there's news that California declared a state of emergency. That the market dropped soon after that. There are more and more cases of coronavirus popping up everywhere, and so the markets are responding. So this so far we've had the a death toll between New York and California at 11. There's a bill that's being passed through the House, the U.S. House, for 8.3 billion dollars to equip the various agencies with what's needed to do proper testing. I'm not going to pontificate about the virus. I'm not an expert on epidemiology or how a pandemic spreads or whatever. I believe there's quite a bit of speculation going on, but I know for sure that one of the key elements here with regards to the coronavirus is that we're probably not testing enough. There's probably more of it than we know about, not only in the U.S. but globally. There are quite a few moves that have been made. Restriction on travel, and so on, and those things are troubling for the global market, for the global economy. The market is pricing in lower earnings. There appear to be problems now with the airlines here in the U.S. There's a potential for the need for government assistance. I love how everything is capitalistic until the government assistance is needed for these companies. But it's something we need to keep an eye on. It is going to have an impact on what the market is doing. So we did drop quite a bit. We made a move this morning from 30.63 down to 30.37. Not huge, but still the market is very nervous. So right now gold is up $14.20, up almost 0.9%. The bonds are up a handle and a tick in the futures. Remember, the bond futures are trading June, and we're seeing the treasuries up, the 10-year notes up 13 and a half ticks. The loser this morning is the S&P 500, down 73 points from settlement, or 2.34%. The Dow is down 617, 2.29%, and the Nasdaq's down 200 points, 2.24%. These are all from settlement. So again, allocation is to safety. The market is trading near the low end of the range, and it's all over the place. So we're expecting more volatility today as the market comes in with this kind of information. Interestingly, at this point, yesterday and the prior day, the volume was much higher. It was about 50% higher. Currently, the S&P has traded 513,000 contracts, which isn't very high. A lot of the volume has come in just recently over the last couple hours. It was a quiet session, mostly overnight. So that, coupled with the fact that OPEC wants to execute a production cut of 1.5 million barrels per day. They want to support the price of oil, and the market has responded to that. Crude is at 46.90, up 12 cents, and has been moving around. This cut is conditioned on Russia, who is not committing so far is not committing to a cut. So those guys want to boost the price of oil while the rest of the world is reeling from these sell-offs. So that's where we stand in terms of what's ahead. Now the big release is tomorrow morning. I don't know how big it is. The non-farm payrolls have been kind of non-movers lately, but we did get initial claims this morning. Came in at 216,000 versus 220,000. 220,000, which is better. Non-farm productivity came in at 1.2% versus 1.4%. We're expecting factory orders at 10 o'clock. It's a half hour after the open, expecting negative 0.3. And then we're clear for the rest of the day, except for Fed speakers at 6:30 p.m. Fed's Kaplan, and at 8 p.m. Eastern Fed's Kashkari, and at 8:45 Eastern Fed's Williams. Again, tomorrow we get non-farm payrolls expecting 165,000. That comes out at 8:30 Eastern, and the market is definitely going to anticipate that. And so that's where we stand. Let's take a look at what we talked about yesterday. For Convergent members, because of the tech issues this morning, I didn't get around to doing the crude numbers and zones as well as the Russell. I'll try to get those done before the market opens. Um, but I believe my data is correct now. I've had to do a lot to get my data to be correct, but I believe my data is correct. So we'll forge ahead. Yesterday, I talked about the fact that this was a P-shaped profile and that we are likely to squeeze higher, although it looks like it was balancing out. And that's where I left you. I left you with this idea that we have this mid beneath us and VWAP at 39.75, which was tying into that 40 area from a couple days ago. And the expectation is for it to continue higher. 31.20 was the key target above. Um, Here's what actually happened yesterday. Let's turn off the zigzags. Yesterday was complete balance. Complete balance. The profile for most of the session was very fat. The volume was in line with the 20-day mean, which is high, which has risen, of course, because of the volatility. But the volume was in line, and we were completely balanced. Look at this thing. It took it forever and a day to break the IB. It took it basically until noon my time, Chicago time, to break the IB. And so what we had yesterday is balance inside of the range. And remember, the day before, the range, the profile. Um, the profile shows that there was active price discovery across the entire price range, very, very flat profiles, and we're opening inside. And the expectation was if we break out of balance and imbalance and go into imbalance, I was looking for the long side, and the target was 31.20, which was achieved. I didn't do any scenarios yesterday. But this is a classic market that is winding up, consolidating, compressing, whatever term you want to use, and then letting go of its energy, and we see it kind of rush through. The profile, the way this closed yesterday, the volume right at the high, I mean, just a lot of trades went off at that 31.27 area, shifting the point of control to the high of the day after quite a bit of time down below. Very, very odd behavior, very odd action on the profile here. And under normal circumstances, I would call this a trend breakout with the point of control at the high. Not a normal point of control is so pointy. Under these circumstances, the expectation is the market is likely to float upwards. Why it's likely to float upwards is because the auction was cut off by the fact that there's a deadline, the close of the regular trading session, and it did not truly. The expectation is with the point of control at the high, it did not really truly find that seller to begin rotating down. And generally, what it does is it just floats, continues to float upwards. And it did not do that. Instead, it opened up a little bit lower and sold off from there. So this is the day session yesterday. Note that we left a nice little gap to the prior close, and we pushed away. This is really strong for the buyers, and I believe I tried hard to warn shorts on Tuesday and yesterday morning that there's likely a squeeze coming here. Volume yesterday was relatively strong by the end of it. Volume picked up later in the session, was quiet during the balance area. The volume is pretty decent despite the thin liquidity in the actual book. Here's what happened overnight. We open up and we immediately go into this, like, kind of spiral down, which accelerated here at 7 o'clock, I think, down in here, accelerated to the downside. And what we have on the low is a weak low. This 3037 is a pretty weak low. The expectation is it's likely to continue, and we're likely to take out yesterday's low at 3075 and start moving towards the 3000 again to tag the point of control down here, the naked point of control down here. So the expectation is this is likely to continue lower unless there's uh, news that reverses this. Right now, the market is pointing down. We had a double distribution profile. The market bounced a little bit through the Asian session, and then the Europeans came in right here, and Europe was a seller right off the bat. Okay. Again, there's a lot. It seems like there's a lot of contagion with COVID-19, and it's freaking everybody out. Their governments, their authorities around the planet that are recommending that people do not gather. I know there's a huge event here in Chicago with some 59. Look, this is somebody I had dinner with last night who has connections within the city of Chicago. There's like an event that has 59,000 participants in it, some big convention. There are a lot of conventions that come here to Chicago. 49 or 47 or 40, 49,000 rooms are booked for this event, and the event was canceled in an effort to stop people from joining together, from gathering. Those are the kinds of things that are causing the market to kind of respond with the idea that, hey, the earnings will be impacted, the economy will be impacted. China just reported this morning that its ports are operating at 20% below the norm. There are 20% fewer containers moving around, and so this is pretty serious. So a lot of people say this is overblown and get off of it and all that stuff, but that's fine. I would rather be cautious than look at this and say, it's just another SARS event and it'll be fine. I'm sure it'll be fine. We'll survive it, but it still has an impact, and the market is responding to these news events. If you want to ignore it, do that at your own risk. So that's and the S&P came out this morning and cut global GDP by 50 basis points. That's a lot. Across the gamut of it, people are expecting worse performance, a slowdown in the global economy, so to speak. And this is why there's a strong argument for another Fed cut, and there's a very, very strong argument for a coordinated cut on several central banks, major central banks. So this is the order flow here. This is the order flow overnight. I'll show you the drop. This is the drop that occurred earlier. You could see here from midnight onwards, we started to really shift down, and we are blowing through the liquidity that's resting there. We're coming into some liquidity currently in this 30 area. We are pushing we've pushed the low, and we are, as I said, we are very likely to take out yesterday's low, and I expect it to make a run for 3,000. I think below there's 26 and then 3,000 as key areas. So this is how this is shaping up. So when we look at the order flow and what's resting in the book, um, there are bids that are being hit across a huge range of prices, but the market is pretty aggressive to the short side currently. So uh, again, we'll wait and see how it opens and how it responds. Hard to say what it's likely to do from here, but overall, even when we look at the volume scope, my volume scope chart is so compressed because of the range, you can't even see the numbers. I have to expand it way out to start seeing where interaction took place at each bar. These are 1 tick by 12 PNF bars, and the market's been a seller here, pretty aggressive. So on these moves down, we're seeing price being gained by sellers on pretty good delta. And so the short side is the side that I'm likely to lean on this morning early on. So I'm going to look for pops. Again, the area I've been watching is around 45 to 49 this morning. That area there is expected to face some resistance, and I'll look for a push up there and a continuation lower. If it does push up there, again, barring any news, otherwise I'm leaning to the short side based on all the context that I see in front of me. Let's take a look at what's expected for today. Again, this is running very long. I know there's a lot to cover. Yesterday performed a pretty decent continuation of the reversal that we had from Friday. Friday we finished with a strong push up. Monday gave us another strong push up. Tuesday gave us the Fed right here with a pullback, but we still had a higher low, higher high on this day. And so yesterday was an inside day with a strong close, and it looked like we are likely to squeeze through that Fed high at 37. And now we're trading down here. So what we have is a trend line that's kind of like this. That's as straight as I can draw one. A trend line that's going like this, and we are breaking below it. To me, I'm not a trade recommendation, but I'm looking to sell anything that pops higher, looking for 3,000 initially, which is only about 30 points away, 38 points away. That's a pretty decent target. I'm looking for this point of control area and this high volume node in the composite to be retested. So that's what I'm shooting for. I'm not going to do the scenarios again. This is all just higher time frame stuff. This isn't short or intermediate time frame traders being in control. This is higher time frame stuff. This is macro kind of movement. There's no sense in me BSing you with some lines on a chart because it's hard to chart a course. It's hard to chart a course when we're in the middle of a hurricane in the middle of the ocean. So I'll leave you with that. The name of the game before you leave, the name of the game is risk control. If you have blown off every risk webinar that's ever been given, every risk advice you've ever been given, you will pay. You will pay to learn the lesson. Believe me, the market is a humbling machine. It's a humbling machine. I don't care who you are. It will humble you. And the thing that humbles people the most is that the fact that they're not paying attention to risk. So if you're not sitting here defining how much you're willing to bet on every single trade on any given day and respecting that, the expectation is you won't be here very long, and that would be a really devastating blow, not only to you, but to the trading community at large. So the goal is to be here to be here tomorrow and to just participate at the lowest cost possible. Good luck.